If you follow me on Twitter, you might think that I believe that stock picking is the ultimate activity and it's the most important. I am actually a firm believer that learning and understanding personal finances is an order of magnitude more important than learning how to invest. You could be the best stock picker in the world. If your personal finances are in shambles and you literally have no money to invest, if I told you to buy the next Amazon today, it would do you no good because you have no money to invest. Conversely, if you're a terrible investor and the only thing you do is buy bonds or CDs, but you have a 50% savings rate over 40 or 50 years, you're going to do great financially. So overall, I think that understanding and mastering the most important principles and concepts related to personal finance is incredibly important. And personal finance and money, it's kind of like diet and exercise. It's very easy to accidentally become overweight or unhealthy, just like it's very easy to accidentally become poor and saddle yourself up with debt. And it's imperative that you learn the most important money principles so that you can make yourself fiscally fit. In the exact same way, it's important to learn the most important dieting principles so you can make yourself physically fit. So when it comes to personal finance, I am a huge advocate of developing your income and creating multiple sources of income for yourself. Many people rely on one source of income for their entire life. And that's because that's the kind of thing that we were taught when we were growing up by our parents and by school. If you can learn to develop multiple income streams in your life, you realize that your income potential is actually unlimited. And just learning that very basic concept that your income potential is actually unlimited, that's not something that many people talk about. Once you have income coming in, it's incredibly important that you learn how to spend your money wisely. And spending your money wisely always starts with the exact same thing with me. It's watching and tracking how you spend your money. I've done financial coaching with a lot of friends and family. And the first thing we do is we just make a very simple income statement and we look at their spending categories. Every single time I've done that, people's jaw hit the floor when they realize how much they are spending on certain things. And you like almost automatically make behavioral changes to reduce spending in categories once you have the numbers in front of you. When you're young, it's really important that you master the basics of keeping your expenses low, because when you're young, your income is typically really low. So learning how to cook for yourself, how to drive an old car, how to maintain things, how to live cheaply. If you can do those things in the beginning and start to grow your income, you really start to expand your savings rate. Once your savings rate gets going, it's important to know what to do with that money. I'm a huge advocate of delevering your life as much as possible in the beginning. And that just means delevering is a fancy word of saying paying off debt. Build an emergency fund for yourself. Really do the basic blocking and tackling so that you can make your personal finances bulletproof. Once your personal finances are bulletproof, then you can use your excess capital to start to build wealth from yourself, start to learn how to invest. And while I'm a passionate stock picker, I fully recognize that stock picking is not for 98% of people. They're just not built for stock picking. They don't care about it. They don't want to learn. And that is completely fine. Completely fine. You can do wonderful financially without ever learning anything about picking a stock. But for those people, it's still important for them to learn the extreme basics about investing and just put their money into boring, plain vanilla index funds.
You know, I love what you're saying here, Brian. It just makes so much sense to me intuitively. I think we're seeing a lot right now of speculation in the markets, and especially we're seeing that with younger people. So people who are newer to the workforce. And I think it's kind of going in the reverse order of what you're recommending. I mean, you're recommending, hey, okay, learn as much as you can, maximize your income so you can boost your savings rate, pay off your debt so that you're basically, you're not working for someone else. You can, you can invest in yourself rather than, let someone basically pay someone else's for lending you money. And now I feel like we're seeing a lot of kind of like this lottery mindset where I'm going to go out and I'm going to speculate, and I'm going to use the money that I'm making by speculating to get myself financially secure. And I think that what I'm hearing you say is that, no, listen, the reality is that, this is kind of a bizarre time, and that, practices and processes are important. Let's get these things in the right order of operations. Is that fair?
That's completely fair. And Todd, you've been investing longer than I have. Have you ever seen a weirder year investing wise than 2020? It was bananas.
It was bananas. And 2021 says, hey, hold my beer.
Totally. It really does.
We were just talking before the show, Brian, Joe and I were talking about GameStop as being an example where you get this runaway momentum because of short covering. And again, it's this speculative kind of thing where people start talking about it, and then they start seeing other people making the money, and then they start getting FOMO or YOLO or whatever kind of abbreviation you want to do or acronym you want to do. And I think that, that worries me a little bit as someone who's been around a little bit. I've seen some of these speculative bubbles. They're fun while they last, but they don't last. Is the problem. And I am a little bit concerned, Brian, about what this could look at. But yeah, I mean, 2020, 2021, just amazing and uncommon, unprecedented.
We went from enormous decline to one of the biggest bull runs ever, both in the exact same year. One other thing that 2020 did is it opened a lot of people's eyes to what investing was. People had free time on their hands all of a sudden. They were stuck at home. They couldn't watch sports. They couldn't do some of their normal activities. And I think a lot of people picked up investing, or at least the concept of investing, for the very first time. And they saw that you can buy some stocks and do well immediately. Like immediately. You buy some good stocks and they just immediately went up. The trouble with that is that can lull you into a false sense of security, where you think that if you just buy certain stocks, you will instantaneously make money. That is not a lesson that is easy to unteach to people, especially if their entire investing experience is 2020.
Yeah, Brian, I know you and I have talked in the past about, I teach a class at the University of New Hampshire, how to talk stocks. And oftentimes we'll say to people, especially last year when we were going through that big deep dive, I said, you're learning at the best time because you're losing money.
That's right.
You want to lose money early on. You don't want to make money early on. You want to lose money early on, because then you learn about risk discipline. And when you learn about risk discipline, I feel like that's 9/10 of the game. Because yeah, it's fun to make money, like you said, just out of the gate. But I'm not sure necessarily that that's teaching you valuable lessons that you can duplicate year after year after year after year.
When I first started investing, and I put that in air quotes, I was buying penny stocks. Those was what attracted me. I didn't know anything about investing. I didn't know anything about financial statements, management, products, etc. The only thing I knew is that these stock prices went up and down. And if I bought a company that was under $5, I could buy more shares, and therefore I would make more money faster. I was lucky because I got my teeth kicked in the beginning. I lost hundreds of dollars when I first started investing. That's not a lot of money, but boy, did it feel like a lot of money at the time. So I have lots of mental scars about investing the wrong way early on. And I learned so much in the beginning from losing money that it shaped the investor that I am today. The other thing that really shaped the investor I am today was 2008. I mean, it's hard when you look at a chart to describe to people that didn't invest through 2008 what it was like to go from I think the peak was in the summer of 2007, and the bottom was in March of 2009. And peak to trough, it was like a 60% decline.
Relentless.
Relentless. And even more important than that, it's one thing to show a chart that says going back and here's what happened, but you know, one, that the turn came, and two, it's a completely different experience to live through something like that hour by hour, day by day, when every time you turn on the news, it's this business is going bankrupt, this business is laying off is laying off employees, and you see the employment rate skyrocket. Buying stocks in that kind of environment is incredibly challenging. All the while, you see that your past investments that had done well completely lost their value. So I don't want the bull market that we're currently in to end. It would be great if stocks just always went up forever, but I know that that's not how markets work. The current bull market we are in will end, and there will be a significant decline. And you are not tested as, or know yourself as an investor, until you have invested through a significant downturn. So a lot of people that have done really well and got started in 2020, I truly wish them prosperity and nothing but the best. But you don't know who yourself are as an investor until you've gone through one of those really painful downturns.